Okay, we're at the studios of FMR in Artscape in Cape Town, and I've got Paul Stevens and Derrick Alton, who are both portfolio managers with Old Mutual Wealth Private Client Services, was it Private Client Securities? Securities, yeah. Okay. Welcome, and I think we're going to have a chat just around the global outlook. A lot of our investors and listeners are interested in what's happening with offshore markets. Our markets run up quite hard, the rand's devalued. And so maybe we can just start a discussion around a macro perspective in terms of we in a world where there's a lot of deflation, equities have run hard for 7 years. What's your view, Paul, in terms of where we are in a macro environment? Should we still be investing in equities?
Yeah, good question, Craig. I think what has really transpired this year is it's all really been about China. We've seen a significant slowdown in that economy. We used to remember not too long ago we saw China at 12% and then lowered at 10%. But now it's not really the scenario. It's more like we just saw numbers the other day as 6.9% GDP growth out of China, so it beat expectations of 6.8%. But it is the worst level it's been at since 2009. So we can almost expect that, I suppose, because that economy is changing very much from a manufacturing economy into a consuming economy, and we now can see that more than 50% of China's GDP is now from the service sector, which is doing quite well. So it's growing nicely at 10%.
So is China buying ice beers? Because that's another story on the global market. SA breweries, and now if you've never been exposed to an offshore share and you're owning SA breweries, things are happening. Just explain for our listeners what are the what's the situation if you're sitting with SA Brewery? What are your options available to you?
It's actually a good question because it's something that's been paramount. We've saw SAB Miller ramp up about 25% on the one day, and obviously that happened when they heard the announcement that Anheuser-Busch was looking to buy them. So SAB is a premium business. I think at the time it was trading on the London listing at about £29. And then straight after the listing, the stock shot up to about £40. Now, in terms of the offer, it was £44 per share that Anheuser was offering. So they're offering quite a bit. So if you look at it in rand terms, I suppose it's trading at a premium of 44% prior to the announcement.
So what are SAB holders going to get? Are they going to get a listing offshore in Anheuser-Busch? Must they take cash?
Well, it remains to be seen how it's going to pan out. If the offer does go through, it's something that's going to be quite unusual, by the way, because this story has been around for 15, 20 years now, and it's never really materialized. So before I answer that, I'll just tell you that we were just very mindful of that, and across the board at Old Mutual Private Client Securities, we definitely took quite a bold step, and we sold all our positions of SAB Miller because we were concerned that if the deal doesn't materialize...
Hopefully after the 25% rise, huh?
Well, that's already there. I mean, it has risen nicely, and effectively, if you look at the year, it's about 40% return for the year. So we've effectively locked in those profits for all our clients. It's not to say the deal won't materialize. I hope it does. I think it'll be not necessarily for South Africa, but for
taking a profit's not to be sniffed at.
Sure.
You might have to wait a year before you get your money anyway.
Absolutely.
So talk to us a little bit about what sectors you guys are looking at on the global space.
Interestingly enough, Craig, we favour two sectors. One is IT and the other one is healthcare. And I'll talk about one or two shares there and why we like them. On the IT side, one of the shares that is very interesting is Google. And we all know Google for its Google Maps and for YouTube and for Google Search. But very interestingly enough, this year, the company changed its name to Alphabet, and at the same time they appointed Ruth Porat, who's a 57-year-old lady from JP Morgan, as the CFO. And what they've done is they've split the company into two separate entities. The first entity is going to continue with the core business, which includes the search, the ads, the maps and the apps, YouTube, and all its related infrastructure. And the other part of Alphabet would include the emerging businesses as well as the investing arms of Google Ventures and Google Capital. This will also include their one venture, which is building driverless cars. And quite interestingly now, they've had a driverless car which has traveled for more than 1 million kilometers without causing an accident.
So that's Elon Musk might beat them to it, though. He's also trying.
I see he's trying. What Google wants to do is they don't want to build cars. They want to build the technology and sell that to everybody else, so which we think is a great thing.
You know why it's called Alphabet, just out of interest?
Actually, that you got me there. I don't actually know.
So quite a bet on alpha.
Right,
So
okay,
you're getting
fair
all
enough.
those high risk, but they may pay off in big rewards.
Well, Craig, you taught me something there. Thanks for that. What I wanted to mention to you is on the day that they actually made that announcement, the share price of Google went up 16%, which represents about 56 billion US dollars. And the two founders each improved their net and their NAV by $4 billion each.
Is there an opportunity for your investors now to also benefit from that growth?
Well, we've been invested in Google since the beginning of our portfolio, so we've done very well. Just to give you some numbers, for the year to date, Google's up 23.8%, and over the last 5 years, it's had a compound annual growth rate of 18.5%, which is phenomenal. That's in dollar terms.
Yeah.
And if you think about it, the company is now the market cap is $451 billion. If you compare that to Apple, which is the largest company in the world, which is $650, it's a huge, huge company. So we really like Google. It's innovative. It's very clever the way it's done things now, and it allows its core business to carry on without disrupting all the fancy things that they're trying to do.
And I see they've partnered with U2, which couldn't make a success of the advertising side, and so really they're owning the online advertising space.
Absolutely.
You spoke about, so that's the IT one, healthcare. Anything on the healthcare?
Yeah, they're a very interesting company called Gilead Sciences, which is not very well known, but they are a company that specialize in providing and discovering healthcare solutions for diseases. And their very first success was they were the first company that came up with one tablet to combat HIV. Whereas before you had to take a whole cocktail of tablets every day, you now take one tablet, and this tablet's been so successful that people in high-risk professions like surgeons and dentists use it as a preventative. So that was their first very, very successful venture. The next one was about 2 years ago. They invented a drug which cures hepatitis C. And up until then, you couldn't cure hepatitis C. You took a whole bunch of pills every day, and all it did was kept you alive. Now, this drug...
So it's also a one-pill solution.
It's a one-pill solution. Strange you mentioned that. It's a one-pill solution which you take for 3 months. It's called Arvoni, and it's got a 95% success rate of curing you, and it costs 85,000 US dollars, which if you convert that to rand, it's 1.2 million rand to be treated. But people are prepared to pay that to actually cure themselves. Now, interestingly enough,
out of government hospitals.
you're not going to see that out of government hospitals. Just interestingly enough, last year, Gilead sold 12.3 billion US dollars worth of Harvoni. And they also have done incredibly well. The compound annual growth rate over 5 years is 38% per year, which is absolutely phenomenal. So we love them, and that's one of the shares that we've got a lot of faith with in the
So
future.
you like those sectors, though. We understand the local market. Is there anything in IT, or we don't have many IT listings, but on healthcare there's a couple. Many that you like in the local space in healthcare?
Sure. Discovery comes to mind. I mean, it is our biggest tilt across all our portfolios, including our core equity portfolio. One of our philosophies at Old Mutual Wealth Private Client Securities is that we do back management, and in this case, a guy like Adrian Gore is a fantastic guy, and he's got a very good management team. He said earlier this year when they had their results that he's looking to grow the business to $1 billion pre-tax earnings over the next 3.5 years.
Have you heard about them introducing this Apple Watch, or some watch that all their clients are going to get? Is that factual?
I would think so. Just talking about Apple Watch, I mean, I own one. I always get ripped off about that. But it's very interesting because if you look at the whole Vitality move for Discovery, it's a big push for them, and they seem to be doing very well on that basis. So as far as a wellness sort of program is concerned, Vitality is it.
Well, Vitality is what keeps it sticky, and
Absolutely.
get them to sell all the other products. And I hear there's talk of banking license. Is that likely?
Yes, I think so. But at the same time, I think it's probably a little bit too much risk for them right now. It's almost stick to your knitting. But that remains to be seen. I think they're doing well just in terms of the core business around healthcare and life.
Aspen has been knocked off quite heavily. Is that one that you'd look at, or anything else in our healthcare space locally?
We do have exposure to Aspen. It has come off quite a lot. I think about 25% from its highs. We do still like that management team, and they are in the generic drug space. So,
Alton and MediClinic, that's quite topical.
MediClinic we have as well. We find that MediClinic's doing very nicely at the moment. Didn't have the best of years this year, but still, from a South Africa perspective, gave about a 33% return to shareholders. They're doing very, very well overseas, and they've got representation in Switzerland. So
One more global stock that maybe our listeners would be interested.
Yeah, at Private Client Securities, we favor the Walt Disney business. It's the biggest holding we have to any company is Walt Disney.
A big Star Wars movie coming out too. That's probably going to ramp up earnings.
Absolutely. So you've hit the nail on the head, because everybody knows them for Mickey Mouse and Donald Duck and Friends.
Yeah.
But it's actually a very, very diverse business. So they acquired the Star Wars franchise, which is starting a new series this year. They also, a few years ago, bought Pixar. And Pixar came up with some unbelievable productions, one of them being Frozen, which was incredibly successful. When they announced the results of Frozen, the Disney share price went up 8% on that day. But what's very unusual and people don't know is that they also own ESPN. And ESPN owns a huge chunk of the broadcasting rights for American football. But more importantly, they own the total rights to broadcast cricket in India. Now, as we know, there's about 1 billion Indian cricket fans who all pay Walt Disney to watch cricket through ESPN.
Do they own the betting rights? So I know the sport betting is
I'm not going to go down the Indian betting. That's dangerous ground to follow. But just to tell you quickly that for this year, Walt Disney is up 28%, and its 5-year compound annual growth rate has been 26%. And it's got a market cap of 186 billion. So it's a great stock. We love it. It's really diverse and it's doing well.
Yeah, we discussed some of the prospects. So now if you're South African and you're sitting and you saw the rand over 14, then it came down to 13.10, it's probably 13.50 now. What's going to happen? When's a good time to take your money offshore if you are thinking that way?
Okay, we understand exactly what you're saying. It's been very volatile, but what one must take into account is that over the last 10 years, the dollar has strengthened against the rand by a compound annual growth rate of more than 8% per year. So we do have a very volatile rand. It has been over 14. It's been back down to 13.20. Today it was trading at 13.56. And so it is volatile. But if you look at it from a long-term scenario, it's almost sure that it's going to continue to devalue against the major currencies.
So look, you're private client security, so invariably it's a discretionary managed fund that you're offering clients to hold. Do they have flexibility? So let's say I don't like Walt Disney. Could I not follow your model portfolio and decide that I'd rather have extra exposure to Apple or something else?
No, absolutely. We give that option to clients. You must remember that we have a business model whereby we interact with a lot of analysts offshore. One of them being Aramco, who's got about 450 analysts that operate out of Mumbai. So we're able to get that information, we're able to assess them. It's good for us anyway to do that. It might be something we haven't uncovered, so it's always worthwhile, but we can provide for clients, not a problem.
Okay.
But maybe just talking about the rand again, because it's very topical at the moment and we have lots of clients asking us what to do. So it's very difficult, but you obviously don't want to take your money out when the dollar's at a peak. But you need to set yourself almost a target, and when it reaches there, take your funds offshore. Because if you've paid a little bit of a premium, over the next few years, the devaluation of the rand will take care of that, and it will be a small blip on the horizon. And obviously the important thing is once you've taken it offshore, you have to invest it into assets that are good, solid, and that are going to grow. If you leave it in cash, you're actually going to lose money.
What's going to happen when Yellen finally hikes rates? What are we going to see with equity markets? Should we be in equities when the world is in a deflationary environment, but we know rates are going to go up?
Yeah, from an emerging market perspective, it doesn't bode well. So if that hike is coming, our market is trying to price that in. Now when the Fed met this last month, there was nothing materialized, and straight away you saw the pickup in our equity market. So if you look at where we are at the moment, it's the closer we get to December, where there might be that decision, you'll start seeing people, just being very mindful of that. And we would expect a pullback, and we would expect a weakening in the rand.
Okay, good. Thanks very much for your time. That was Paul Stevens and Derrick Alton from Old Mutual Wealth, Private Client Securities. Thanks for that.
Thank you, Craig.
Thanks, Craig.